Welcome back from the break. Thank you so much for staying on the show with us today. Our next guest is Mr. Aziz Nishtar, who is also the ex-Deputy Commissioner Income Tax, a Harvard Law School graduate, and is now an advocate and a lawyer who has his own, what would you call it, Nishtar Saab? Firm, exactly, that's it. Lawyers have a firm. Yes. Thank you so much for taking the time out and talking to us today.
Thank you for this introduction.
Income tax, first and foremost. Can you tell us about what is income tax and what is taxable income?
First concept that one should learn about income tax is what is income. Usually, it is thought that what you earn minus your expenses is income. In most of the countries, this is the income which is taxed.
Okay.
But in Pakistan, we have a little bit of different taxation framework in which certain kinds of income, whole of income, without giving any credit of tax, any expense, whole of income is treated as
taxable income.
As taxable income. But certain kind of incomes where people are either contractors or providing services to big firms, whole of their revenue is treated as income. So there was a lot of hue and cry when this concept was introduced in 1992. People went to courts, and some courts said that it was illegal, government could not do that. Other courts said no, it was allowable under the constitution. Then in a famous case, Elahi Cotton versus Government of Pakistan, Federation of Pakistan, the Supreme Court said the government can treat any income as, any revenue as income. So now income is not revenue minus expenses. It can be whole of your revenue.
That is very unfair.
One can say, but the situation was that in Pakistan, most of the businesses were doctoring their accounts, because of which most of the big business houses even were declaring losses or very paltry income.
That's true.
Because of that, government was not getting any revenue. So most of the businesses are now traders. They buy manufactured goods and they sell.
Yes.
Some sell to retailers, then retailers sell to the consumers. All these cases are, we call it presumptive income. It's not income. Okay. It has been presumed as income. Taxes are as high as 20% in business, and 25% in business, and 20% in case of salary.
But what about companies like multinationals and all? Like, I mean, does it change depending on how much you're earning? Because obviously the taxation changes on what you're earning. So if you reach a certain income bracket, then you're paying this much tax percentage. If you're reaching that bracket.
In case of individuals, and we call it AOPs, partnerships, and other, where more than two persons are gotten together. In such cases, there are slabs of income. There are many slabs of income.
Okay. You know, where taxable income does not exceed rupees 100,000, rate of tax is 0%. Where taxable income exceeds rupees 100,000 but does not exceed rupees 150,000, 7.5%. Between 150,000 and 300,000, it does not exceed 12.5%. Between 300,000 and 400,000, it does 25% of the amount is taxed. 35% is taxed when it is between 400,000 and 700,000. And then above 700,000, you are paying 35%.
No.
No?
No, actually it was changed.
It was?
In 2009's budget.
Okay.
It was changed. It was introduced in 2008's budget, but in 2009 it was
changed it.
They changed. Small company is one in which the capital capital investment is of 25 million, and the total turnover of the company is not more than 250 million rupees. And it does not employ more than 200 people. So for those, that was fortunately my concept. Actually, I gave this concept to a task force which was formed by Securities and Exchange Commission, they wanted to encourage corporatization, so that businesses which are partnership, which are small entrepreneurship, but they have grown into big businesses, they should become a company. I gave a couple of other suggestions also, but they were not accepted. This one was accepted.
Of course. With that, Nishta Saab, coming back to the individuals, what happens if you don't pay your income tax?
You pay penalty.
You pay penalty.
And penalty in current law is relatively lower. I mean, lower is 100%. Okay. If you evaded tax of 100,000 rupees, 1 lakh rupees, you will, if you are caught, you will pay that 100,000 plus another 100,000 as penalty. In old law, in 1979 law, it was up to 250%. For tax evasion of 100,000 rupees, you would pay in that case up to 250.
Is this introduced because in the middle, I remember in the last government, a lot of people were getting encouraged to pay up their taxes. Is that why?
No. That was another thing. That was tax amnesty, in which they were actually encouraged that because
to declare.
Actually, our tax machinery is not very efficient at all.
Obviously not.
And people, if pay, it's good. If they don't pay, it's not bad. It's not bad.
No, actually, you're very intelligent if you pay, right? I mean, it's really respected here if you don't pay. But, okay, what about Pakistanis residing outside Pakistan?
There are two systems widely used in the world. One is called global system, other is called scheduler system. Okay. In global system, your income is income from all sources is lumped together, but that system is not being used in Pakistan. In Pakistan's case, if you are tax resident, only then you are taxed.
Okay.
For becoming a tax residence has nothing to do with your nationality.
Okay.
Even if you are a Jordanian citizen, an American citizen living in Pakistan, for more than 183 days in a tax year.
Okay.
Then you have to pay taxes according to Pakistan's law. Okay. Otherwise, if you earn something in Pakistan, that will be called Pakistan source income, and you will pay tax in Pakistan. Since most of the Pakistanis living abroad are not tax residents in Pakistan, they will not be paying taxes in Pakistan.
What about in the case of, is there a disparity between how men are taxed and how women are taxed?
A little bit.
There is?
Yeah, luckily women are given a little bit of
levy there.
Yeah.
Okay.
For business men, basic exemption limit is 100,000 rupees, but for women it is 125,000 rupees.
Okay.
Sawa lakh.
Okay.
And in case of salary, a salaried taxpayer up to 200,000 rupees is tax exempt, but in case of a woman salaried taxpayer, she is exempt up to 260,000.
And what are the different income tax slabs?
There are many slabs, about 13, 14 for business people, and about 21 for salaried people.
And what do you mean by slabs?
Actually, it is not called slab. I would call it income range.
There
used to be a slab. In slab rate, your income from one point to other points attracts certain tax rate, and the next slab, higher slab, attracts next rate, and then we accumulate all the tax. Okay. But here, if you fall in one income range area, whole of your income will attract the same rate. It can happen that if your salary is 1 million rupees, say your tax rate is 5% and your tax is 50,000 rupees. But with 1,000,001 rupee, your tax rate becomes 6%. And just with 1 rupee of change in your income, you will have to pay 10,000 rupees more tax, because in that case you
come into the different bracket.
It will become go from 50,000 to 60,000.
60,000.
But that has been addressed now.
It has been addressed. With that, we do need to take a short break. Please don't go too far. There is a lot more coming up. We will be talking about sales tax as well as the federal excise duty when we come back. So just a short break, and join us again in the studio afterwards.